Okay. All right, guys. Let's go over our options watch list from last week and what we will be watching for this week coming. So, started off this is Netflix. I am still holding this. I think I've been holding this for like a little over 2 weeks now. This is a leap contract for January of 2027, down 25% on this, but I have conviction that this will turn around eventually to give me a nice return. So I'm going to hold. Generally, I would get out at minus 20%, but for this specific trade, I'm gonna hold a little bit longer. So as I was saying last week, we're at these lows right here, which is a pretty strong level, right? This is a key level tested at least 4 times already, and it held. We will see if sellers are able to push this down any lower. Yeah, so that's Netflix. I traded Amazon. ZN. I traded Amazon on a breakout of it was intraday. I don't think I had this on my watch list. I'm not. Wait, actually, yes, I did. So on this day, January 23rd, it was a Friday. I noticed that we were consolidating within, like these trend lines here, and on the breakout, I went into a bit of drawdown, pre-market, shot up, came back down, retested the level, and took off. So I think this is over a 50% return on this contract, the contracts that I had for Amazon. So that was a win. Dell, I did not get an entry on. It's not my usual type of setup. But like this horrible depiction of price action, what the possibilities that I think would arise would be are basically shown by these drawings. So number one, we could have broken down out of this bear flag, right? Which we did. So we broke down, came back, retested, and it looks like we're dropping. That's actually number two. That would be signifying what would happen in possibility number two. So we broke down, retested, and now we're dropping, right? So I didn't see the breakout. I wouldn't have been able to catch the breakout of this bearish flag because it gapped. So that's one issue there. And then like price was pushing up against this level. I didn't feel comfortable getting into it, so I did not. And now we're rejecting. We have this bearish close. We'll see if it drops or not. I took it off my watch list because I can't be bothered. I prefer to stick to my high probability setups, which are my fallen wedges, bull flags, bullish hammer at support, bullish engulfing. So that one, no entry, not keeping on the list. SMCI, I entered this with 2 different contracts. One of them, what the hell was it up? Maybe I think one of them hit maybe like a good 50 to 60% return. The other one was in drawdown. I ended up getting kicked out of both of them, one for a loss and the other basically broke even for whatever I what one was in profit and then the other was not. So when I got kicked out, they canceled each other out. So I entered I entered the first contracts here. They were up, we came down, they were up again. On this retest, I decided to get a different strike, different expiration, and the market tanked because of news. So not really a winner. Just call it a break even on that one. Let's see, Oracle I was watching as well. I did not get an entry on this. I think it was somewhere up here when I was watching it, and it just did not play out the way that I wanted it. Currently, it printed like this bullish hammer at support at the 7.786 fib, but I just don't believe in the price action right now, so I'm just watching to see what it's doing. If this hammer had printed when it cleared these lows, I would be more inclined to take the trade. So no entry on Oracle. AVGO. Wait. AVGO was actually a pretty big winner for me. I caught this on, I think, on my way home from work. Not the most comforting thing to do, but it is what it is. This candle here, let me change candles. Here we go. This green candle here, this one here, this is a doji at support. So we filled in a portion of this gap right here, right? We crossed the halfway line, cleared liquidity below here, and then indecision. So sell-in pressure was being absorbed. I entered at the break of it was the breakout level of the doji because it gave me a safer entry where we, here it is. Let's see if I can get this closer. So a break and retest is basically what this was. So price broke out, right? This is the top of the doji. Price broke out, came back down, retested, and I entered here when the candle flipped green. And I held it. By the next day, it was up 100 and something %. So massive winner for me. I wanted to see if we could break out of this trend line here, this one right here, but price basically came back down to retest the same level again, and now we're pushing up against it. I would take another trade at this breakout and retest to go higher. So on the back burner for now. So that was a winner. T-Mobile. I am currently holding T-Mobile. I entered this on Friday. This is barely up by anything. I think, let me see. I think this is up maybe like 1%. 1%. So pretty similar entry to some of the other trades that I've taken. The one thing I didn't like when I looked at the hourly chart, this candle is what I saw, which is like a big FU candle, right? Like prices are being rejected from this level. So we'll see if we're able to continue. And I'm up 1.79% on this, so nothing to write home about. We did gap up. In sympathy with, I believe it's AT&T because their earnings were good. So I was hoping to get the entry here, but we gapped up basically here. Hopefully we can hold the strength and momentum and continue higher. So holding on to T-Mobile, which is AT&T, I entered this one on a lower time frame when we cleared out these highs right here, and it also corresponded to this yellow trend line going down. So I entered, I caught this entire thing up to this fair value gap that I felt as if it was going to be resistance. It really wasn't. The next day it just continued higher, but I sold up here 170 something % winner on this one. So not bad. I don't catch 100%ers all the time, but when I do, I'm very happy about it. So that was a winner. I was watching Tesla. I didn't get to hold the Tesla trade I was in. It was more of a day trade that I took off of it. I think it was back here, which I probably already talked about. I didn't get a good setup to re-enter this, so that one was just something I was like keeping an eye on. There was unconfirmed news that Elon Musk was going to merge Tesla and SpaceX, which would be wild. Tesla shares would moon if that's actually true. And now that I'm looking at this kind of looks kind of flaggy on the 30, right? Almost almost looks like a flag. And then the body, the flagpole would be here. I guess we shall see. There is a gap down here now that probably needs to be filled. They don't always fill, but sometimes they do. They can be used for entries. So no re-entry on Tesla. Meta, I didn't get a re-entry on. I day traded Meta when they broke out of this yellow trend line, and I wanted to get in for earnings because some of the people I trade with were planning on doing it. Actually, they did it. They got in on the day of earnings, and the next day this is where we open. So massive winner for them. Not something that I was super comfortable with. I didn't want to risk the profits that I had already collected from my other trade. So no re-entry for me there. Another decent sized win-in trade was CrowdStrike. CrowdStrike broke out of this fallen wedge. Fallen wedge plus what was it? Bullish divergence. There we go. So I caught this breakout on the lower time frame, this green candle right here. And I sold, I believe up here. I think it was a 60 or 7% return, which again, not terrible. Yeah, it wasn't a bad trade at all. So that was another winner. Something else, I was in Uber. I got into Uber, and the level that I was in failed. So I was watching, and I was saying to myself, like, my money is basically tied up in this trade. We can't break and hold this level. Actually, it was this level first that I got in, and it wasn't holding. So I sold out of Uber and basically rolled it into another trade, which ended up working out. So good on my part. I am looking to get back into Uber because I see earnings coming up, and I have a feeling that we won't be pushed down much farther than this. This is more of a earnings type gamble. Like there's nothing on this chart that's telling me to get in right now. Only if you're thinking about like trade in support. It's like we hit this level once, twice, let me see. One here, one here, one here, and then this current. So like 4 different times to go longer, to go along. I would love if their earnings are just like super impressive, and then guidance is the same, so that I could take a trade off of that. So that's for last week. We have what? One, two, three, four, five winners. I'm holding Netflix. Dell no entry. Oracle no entry. Actually, I don't have that many losers for this last week, which isn't terrible. But anyway, let's move on. This video is getting too long. So this week, I am watching 2, 4, 6, 8, 10, 11 different stocks, which isn't great when I'm not really home, when the market's going to be open on a Monday, but it is what it is. I noticed that Ulta broke out of this, basically out of its all-time highs, right? So it tried to break out one, two, three, four, 5 different times, and then it finally did. We came back, right? We came back down towards support and then created this bullish engulfing candle, this green one right here. So at support, this is very significant. It basically ate up the entire body of this red candle here, right? And it did it with rise in volume. Like if you look, ooh, what is that? If you look down here, we have volume coming up. So I would be willing to take a trade, a continuation trade at the break of this level. No, I'm sorry, not this one down here, not the bottom one, this one up here. This could be definitely a continuation trade for me. And I am not opposed to taking the break and retest of the top of that bullish engulfing to see if we can get a nice little gain from it. So that's on watch number 1. Then we have Abbott Technologies, or Laboratories, I should say, which is another massive engulfing candle with rise in volume at support, right? So I just have a feeling that these can turn out to be something beautiful if I can catch the trade when they're about to take off. So another engulfing candle, and it's the same way I would enter it. A break of the top of this candle, retest, continue higher. And if I feel extra risky, I get a 5-minute close above, I'll just take the next candle all the way up. Trade number 3. This is Kraft and Heinz. I see a flag within this bearish channel. Bearish channels tend to have breakouts to the upside. So you see how we're consolidating inside of this price continuation down. Prices tend to break out of channels that are slanted down like this to the upside. So I want to catch that breakout. We also have this thing here that looks almost as if it's a bull flag, right? So this would be the flagpole, and this is the flag itself. So these you would trade either the breakout or the breakout, retest, and go. I am taking the breakout on this flag. If this is signifying what I think it is, then I'm going with it. And I like to see rise in volume, right, for the up move. And then on the pullback, I want to see smaller red volume candles. That means that the selling pressure is not as high as the buying one. So on watch, A+ setup. I love flags. They're very easy to read and basically easy to get into. This looks somewhat similar to another flag, and Merck and company, this stock has been doing this like over and over and over again. I don't remember which one of these, this one I think, right? It was in this descending it was under this descending trend line, right? It broke out, retested, and then went higher. It flagged here, went higher. So I feel like it's just a continuation pattern that continues to show up. Ha ha ha. And I want to catch a piece of this next move that's brewing. And again, look at our volume, right? We have rise in volume, right, for the price leg that's going up. And then on the pullbacks, we have smaller bearish volume. So another flag that I'm watching. Best Buy. Best Buy is in a wedge, fallen wedge. We also have bullish divergence, which I love to trade. Let me see. Yeah, it's bullish divergence, indecision doji at support, fallen wedge, and as always, volume. right? So there's a wedge within the wedge, this yellow trend line and then this white trend line, right? Those are the two top ones, and then this and this would be the bottom trend line. So support trend line, resistance trend line. I want to take a breakout of the resistance. This level here at 66.50 would be where I would take the first portion of my position. And if we get a retest, so the retest would be something like that, I would add more contracts. We break the yellow trend line, add more, retest, retest to hit these highs up here. All right. So high probability setup. American Express. It's a bullish hammer at support. We took liquidity under these lows, right? And we came down, we wicked. This tells me that buyers stepped in. So prices might break the top of this hammer for us to go higher. More of a 1 to 2 day hold than something extended. We do have a gap up here to fill, but I don't know how far this will be able to go. Okay. Waste management, similar setup, bullish hammer at support. We have this fair value gap that could be used as resistance. So this would be somewhat of a TP level depending on how many contracts I take. So I would like to see a breakout of 222.8 to consider an entry. Earnings weren't that great and volume isn't basically going in the direction that I wanted to go. So lower on the list in terms of trades that I'm thinking of taking. PayPal. PayPal is at support in this gap from back here. Like, hopefully you guys can see this clearly. Let me widen this out. So the space that got left behind right here where the candles are not overlapping, that is a gap, right? And we have this indecision doji at support with volume. Earnings are coming up. What else did I just trade that had a similar setup? AVGO, right? AVGO fell into this gap, right? Fell into this gap back here. This massive gap, right? It came down to the 50% line, right? And then once we broke above it, I went long. So I'm thinking PayPal might give me the same entry for the same setup. So this candle, as simple as it looks, can be very powerful in a trade. Cisco is consolidating between these two trend lines. This could be a day trade for me if we can break, retest, and go. Let's see, volume is rising, so that's another thing. We do have this gap down here, which sometimes they like to come back down to fill them. It's not a certainty, but it does happen. Not my favorite in terms of chart patterns to trade currently. And then Adobe came down. Let me see, cross. So where did Adobe stop? Adobe stopped right here. I wish it had taken out these lows. I would be more inclined to take a trade off of this. I just want to watch to see what's going to happen with this. Oh, actually, I'm lying to you. Adobe actually has a decent setup. Did I not write this down? I think Adobe has bullish divergence. Let's check. So indicators, moving average, RSI. Okay, so lower low. Yeah, so Adobe has bullish divergence as well. So this needs to be a wee bit higher so I can pay attention to it. Prices are making lower lows. So lower lows, lower high, right? Lower low, lower high, lower low. And the indicator, right? at this point right here made a lower low with it, but this one and this one don't match. This low, right, is a higher low and this is a lower low. So prices continue to slant down, the indicators are starting to slant up. So that's divergence at support, which makes it bullish. We will be watching like a hawk. What else do we have? Lowe's. Lowe's is a pullback trade. This price leg from here to here is pulling back to the 50% of the Fibonacci and the fair value gap, right? The golden pocket. If we can come back down a little bit farther, I would jump into this. If not, and I just want to take a quick trade off of it, it would be this hammer candle because it is at support, and I think this might be a moving average as well. Yeah, this is the 21 or 20 MA. So usually when prices are in a trend and they're holding, they would stay above this. So we shall see what we get tomorrow morning. Last one, another hammer. Oh my God. So on the daily time frame, we are basically resting at the 20 MA, the 400 MA, and the, what is that? The 50. So we're at the 20, 400, 50 being used as support. These, well, we did pull back quite a bit, and if you look at your fib from the last low to the high, we wicked off of the 0.786. We shall see what happens. Earnings again was what tanked this, so buyers stepped in to defend this position or these lows back here. So we'll see if they're going to try to push prices higher. This video is way longer than I wanted it to be, but that's all that I'm watching for now.